Are you struggling with getting right strategy to use so that you can start making money in Forex? Forex business is the most hardest business in the world which I ever seen. But on the other side, Forex is the easiest business that everyone can do. All in all, to make money in Forex, you have to be having a right strategy, good informed, and you knowing what to do. So if you have been struggling with getting the right strategy to use, you have been scrolling across over the YouTube finding which type of the best strategy that you will make you money from the Forex. By the end of this video, I guarantee you that you will be knowing exactly what to do and what to be looking in the market so that you can start scaling up your trading career. Volatility 75, volatility indices, they are the indices which I always like to trade and which I recommend everyone to trade, because volatility indices, they are the indices which are very easy, everyone can trade, everyone can master in easy, simple way. This VIX75 index scalping strategy is so easy, simple. So sit, relax, and enjoy. Alright, VIX75 index scalping strategy. We always know that the market, it moves high highs and always making the lower lows. If not, it makes the consolidation. We all know that. But why it comes that when the market it moves high highs, high lows, high highs, high lows, high highs, high lows, we know that it's going up. And when the market is making the lower low, lower highs, lower low, lower highs, lower low, lower highs, we all know that this is a downtrend. We all know that this is a downtrend. But the question is why we know that when the market is going down we have to buy, and when the market is moving up when the market is going down we have to sell, and when the market is going up we have to buy. But the question is, we know that it's not the first time to hear, but the question is, why do we make losses? We make losses because we don't know which right time to buy, which right time to execute in the market, which is the right time to exit the market, which is the right time to be away from the market. That's why the most cases we make losses. That's why we look strategy after strategy, strategy after strategy. The strategy number one, before I explain this strategy, the strategy number one is money management. If you having $100 account and you risk $20 per trade, I guarantee you that account it will never last 5 days. But if you have your $100 account and then you risk $2 per trade, I really guarantee you that your account will last more than 6 months. Why? Because your risk money management is good. when you are risking bad, you will blow your account. When we are risking good, we will manage our account. We manage the risk. To take a trade and the trade runs against you and the trade hits you stop loss, it's not the case. But the case is, how do we manage our risk? How do we control our risk? The game is all about how do we control our money so that they don't be taken. Are you getting the point? So you will get any simple strategy, any good strategy, but if you can't manage your risk, you can't succeed in Forex. If you can't risk what you can afford, you will not manage to sustain the Forex game. Why? Because Forex is a high risky business and it is a game of probability. It is a game of a probability. Because it is a game of the probability, we have to think out of the box, and then we know exactly what to do. So let us go to the strategy. This strategy is going to help you because it's so super easy. Stick on it, practice it, do it. Reason many traders we don't make profit because we jump strategy to strategy. Before I show you this strategy, before I explain you this strategy, if you know you have a strategy that if you can deposit $50, you use that strategy, and that entry you entered, make you use a lot size of 0.001, and that strategy which you have used to execute can make you $3 to $5. I honestly ask you, stop watching this video from now, go on the chat right now, start implementing your strategy, which means that is your strategy will help you to do what you are wishing to do. If you totally have no any strategy that you trading, this video is for you. If you have been trying to get strategies, you tested each strategy, it have failed. Every strategy which you test is making loss, this is the strategy for you. So let us start our strategy. Here are the rules what we have to follow. Rules what we have to follow. Rule number 1, find overall daily trend. When you open a chart, before you click a buy or sell, you must have to understand where the market is coming from, where the market is going. That's why you have to find a overall daily trend, by which means when you open your chart, you go directly to daily time frame. You find the daily time frame, where is it heading, because the daily will give you an ego crow, which will give you a big picture to know that the market now is buying, the market is consolidating, and the market is selling. Step number 2, rule number 2, find H1. After getting the overall trend, we go down to directly H1. We find the higher highs if it is the uptrend, or we find the lower lows when it is a downtrend. Rule number 3, wait the price to come back at recent higher high or recent lower low, as in price making a high high retest or a lower low retest. Rule number 4, wait the price volume to increase. It can be a long position or it can be a short position. Rule number 5, your entry point at the close of the momentum candles. At the close of the momentum candles. This is what we call a strategy. The strategy will tell you how you should execute in the market, when to execute, when to exit, and when to take the profit, and when to be out of the market. So this strategy is simple. Stick around with me up the end so that you can master this simple volatility 75 index strategy. So you can screenshot these rules, or you can rewind it and then you watch again. So let us go to the chart and we start our top-down analysis. Rule number 1, find overall daily trend. So let us go to the chart and we find what our overall daily trend. Now, right now we are on the chart. We click daily. After clicking daily, we have to zoom. Is it zoom in, zoom out, whatever? We can see now that the market is moving. We can see the market is making the lower low, lower highs, lower low, lower highs, lower low. Obviously, days from here to here, the market is going down, which means that this overall trend is a short. Is what? Is a short. We have to look sales only. We have to look sales. Our overall trend is sell. So we have knowing that. Another thing, you might get confused and you ask yourself, how will I see that it is a downtrend? You can see, let me try to zoom out like this and you see very well. I think like that. So let me add a little bit. Yes, you can see. With your eyes, you can see that this was 1 day, 2, 3, 4, almost a week. The market is going down. This is a pullback. It continues. You can see that the momentum of the market is too high, pushing down the market. Overall, you can see that automatically it is what? It is a downtrend. So next step, you can also get a trend line. You can get a trend line like this. You draw. You connect this the top. This is the top high lows. You connect this the top lower highs, these ones, and then you extend your line down, your trend line down. Also, you can know that it is overall a downtrend. So we have finished that. We go back to our rules. What our next rule say? The next step is that find H1 high highs in uptrend or lower lows in downtrend. So we have to find. We go directly to H1. That is what the strategy is. We will go to directly to H1. We can see H1. We have to find the recent lower low. If it is the market going up like this, if the market is going up like this, we have to find the recent this high, the recent high. The market, if it's going down like now, like this, we have to find this recent lower low, recent lower low. So we have got now our recent lower low. What is the next step? This is our recent lower low. Are you getting the point? This is the lower high, this is the lower high, this is the lower low. These are the minors, don't consider them. So market is struggling now, was struggling here, trying to push up 5 triples and it breaks. So the market has break this recent lower low. So when the market breaks this recent lower low, we draw our zone here like that. We wait the market to break. You can see right now that the market has break this recent lower low. Are you getting the point? So what do? We have to wait. Step 3. Wait the price to come back at recent high, as in a price making a high retest, and vice versa. So where there is high, let us put lower low. Wait the price to come back at recent lower low, as in price making a lower low retest. That is what is going on right now. So we go back to the market. You can see that the market now, it have come back making a retest. It's making a retest. So now we have to wait. That is what we need. Number 4. Rule number 4. Wait the price volume to increase. It can be a long or a short. Now we are looking short. So wait the price volume to increase. So how do we wait the price volume to increase? So we see now that the buyers, we know that the overall trend, we are going down, and the market have already break, confirming that we are going down. So we see buyers, they are still in. We have to wait the price volume increase, which the price will be, the volume will be taking over buyers, and the market will turn to the sell. So we have to wait this. We have to wait here a bearish candle start printed, guys. If we see a bearish candle start printed, we do what? We execute, because this was a breakout of our recent lower low. The market have come back to retest, and then we are waiting the momentum to come in, and then we take the entries after the closing candle, H1 closing candle of the sellers. We have to wait the bearish candle here, the momentum candle. When H1 close bearish engulfing like this, and then we take what? We take a sell. So let us go back to our rules to follow. Yes, our rules to follow. Why the price volume? We have done that. Entry point at the close of the momentum candle. We have done that. That as simple, as easy as eating chips like that. So the question is, where to put your stop loss? The stop loss is going to be above the candles. The stop loss is going to be above the momentum candles, which will be printed here. Let's say that this is a bearish engulfing candle, which have printed here, and they're having some wick here. Then we executed here. This is our entry. A getting point. Our stop loss is supposed to be here. So how do we take the profit? What we have to do, we do like this. We get a rectangle tool. Our rectangle tool, guys, we measure from the stop loss to entry. That distance from our stop loss to the entry point, we do what? We do like this. We shift. We shift. Let me go to the daily time frame. Maybe yes, we shift like this. We move from what? From entry point, and then we make 2 times the distance from entry to the stop loss. We make 2 times to the profit, which means we are going to lose. If they hit our stop loss, we are going to lose 1. If we take profit, which means if we are going to lose $5, we have to make $10 in profit. So let me take you to show you some examples. So here are the examples, what I'm trying to tell you guys. So if you can see here that the market is going up, we are on the daily time frame now. Let me go back to H1, and you can understand. Let me go back to H1 very well. We are here now. We know that we are on a downtrend. If it is uptrend, if we can see the market is making high highs and high lows in H1, we don't take them. We have to confirm that the market is going down. Like, see, you can see here, guys, from this side to here, the market is going down. It's going down like that. So it's when we implement our strategy, guys. It's when we do what? We implement our strategy. You can see that the market comes like this. It breaks here, this zone. Are you getting the point? After breaking that, it also breaks this. So we wait the market to come back. Let me put a zone here, and you see the market broke here. Are you getting the point? It drops like crazy. So we wait the market to come back here. Don't take the entry when the market is there. No, you wait. It do whatever it does. When it finishes, you can see the momentum candles, they have started to be printed. You can see that the buyer, the sellers are taking place. So when this happened, you have to execute. You can see here, guys. You do what? You execute here. Stop loss above. Then you make 2 to 1. You done, guys. You wait another setup. You can see, guys, the market come and breaks this area. You can see clearly here. You can see clearly here, the market also broke this side. Are you getting the point? After breaking that side, guys, finally it goes up. There was no good momentum candle. Let us say that you have entered exactly here. You have entered because here there was what? A simple rejection. You can see very well here. Let me put some arrow. You can see that, for instance, you clicked a sale after seeing this ready candle. You entered here, guys. The market started going your way. Almost 1 hour market is going down. Remember, your stop loss is here. You already on what? At the break even. Never allow the market to come and take you. At least you be out of the game rather than making a loss. So it moved. You have some pips. You on the break even, guys. If the market it is to go on your way, it will never come back. It will start moving seriously, not coming back. Even if you're on break even, it will not come back. The moment it comes back, which means it will be going to hit your stop loss. So that, are you getting? So let us say that you have not been in the break even, then your stop loss, it was hit. Yes, that is the strategy. Remember, you lose 1 to gain 2. You lose 1 to gain 2. If you lose 1 right now, if you get if you get it. So that was a loss. Remember, the first we win and the second we lose. So let us wait here and we see. Yes, here you can see around here, you can see clearly, guys. It breaks here. This kind was break, this come and retest, and this one it was you execute here. It moved down almost 2 hours. You only break even. Now you can see from here to here where the stop loss should be. It is this from your entry to here. It is bigger than this, but which means you was already having 1-to-1 R. You already on break even, and you already your TP1 hit, because your TP1 supposed to be on 1-to-1 R. You take some entries, you be on the break even, and then you go. Are you getting the point? Yes, you can see that the market, we look for sales only. When the market is going up, we don't bother about it. You can see around this place, guys. You can see around here. Do you see that? Yes, the market break very well. You can see around here, guys. You can see here the market came and finally break, come and retest. We executed around this area, our stop loss above. You can see how the market moved all the way down. You have win that. Also, it is the same thing. You can scale in, you can see break. After breaking, you draw here your zone again, like this. Are you getting point? Like that, the market had break, come in and retest here. Give you the momentum candle, you enter the stop loss above, and then you read it. It is the same thing, guys. You can see it is a repetition. You do like that, no stress, no complicating things. Are you getting the point? So make sure to keep doing this, to keep seeing this in your chart. Make it practice before you go live on your demo. And if you're still struggling how to get the sniper entries, make sure to watch this next video here.